the economy slowing down, an attempt to transition to a different type of economy. I mean, how long can we count on China to be the bid out there, the demand, the big demand?
Well, I think it's a great question, but I think for a long time coming. Again, I wouldn't be dissuaded by the tactical short-term fluctuations. Of course, there is clearly a slowdown going on there. They only have 300 million people who, quote unquote, live like us. They've got another billion who are desperately poor, who, if the genie's out of the bottle, they want to improve their lives. In the United States, sort of the ratio is 800 to 1,000, 800 per 1,000 own a car. In China, it's something like 80 per 1,000. It's unstoppable. And whether it's people want to improve their living conditions, and I'm talking both, not just building buildings for the sake of it, but the quality of their living standards, the spades of urbanization. I mean, this is a country that already has over 160 cities that have 1 million people each. They have a massive campaign to increase that significantly. I think they're looking to put 25 cities with 10 million people each. There's a huge urbanization campaign underway. The notion that somehow structurally the China's slowdown story and their desire to move away from investment towards a consumption-based economy is going to have them depend less on commodities, I think is foolhardy. And beyond that, we know that there are already commodities today where China is the marginal price setter. I would argue that in copper and in coal, they are the marginal price setter in the market, and I just cannot envisage a scenario. And I've tried to, as a good economist, I have on the one hand and on the other hand, but I cannot see structurally a story that is credible for there being a lack of a bid from China for natural resources. I just don't see it. And whether it's land, their land rush and campaign in Africa, they're rerouting whole rivers in India because they need water desperately. I can talk extensively, I'm sure, about the massive campaigns that they have and the contracts that they've gone into, and food contracts and soybeans and so on in Brazil. I mean, here in the United States, I mean, there's not a single area between land, water, energy, and minerals that I see a reprieve coming from China.
Can anybody see anything different? I mean, are we really seeing China as a structural, secular, big consumer of all these commodities, or is there anything to worry you in that respect?
No, add India, I mean, add Asia, the southern part of the hemisphere that is, creating 20 million jobs a year. This is big. And as you said, there's 3 billion people to go here.
Right.
Yeah. Where all the resources are going to come from, honestly.
Yeah, and also, I mean, even if you go back to 2008, right, which was a very ugly time period in the economic environment, what they have, $4 trillion of U.S. reserves, and what they did is they just dipped into those reserves and started building a bunch of stuff domestically, and they're so committed to urbanizing 20 to 30 million people a year, which is what's driving all this, and they have enough money even to sort of power through cycles. Now, the scenario I can come up with is regime, a problem with the regime, a political problem. So, you look at some of the headlines recently about some of the political issues, and if there were to be, a revolution in China, but that's really what you had. That's your bet, that there's not going to be a revolution, and the government really does mandate, a growth rate and then spend. It's very different than our economy. If you go over. I met with 7 or 8 CEOs of Chinese companies, and I said, what do you think the economy is going to grow at? And they said, 7 to 9%. And I said, why? And they said, it's because the government says it will. And so it's a very different scenario than the scenarios that we're used to here in the West. And so I think you have to come up with pretty volatile scenarios to think that China won't be there. It may slow down a little bit, but it'll be there from a growth.
If we look at our own lives, every single one sitting in here, us all here, we have increased over the last 30 years our personal carbon footprint. I mean, I'm spending a lot with a private jet now, so imagine but look at everybody's life here. We're traveling more. It's all, you eating probably some Brazilian fruit, mangoes, probably. Imagine it takes energy to take it here so you can eat it. So it's brutal.
Can I just say one thing? I think the more nuanced conversation that maybe has a bit more of a more interesting dynamic is the relative value trades, because to me, if I had to pick between copper and iron, I would say there's a much stronger, much more compelling story that China will want more copper than iron. And one of the reasons for that is, and I think you've probably seen this, is that there is a bearish argument around iron that the Chinese have actually largely built out their infrastructure. They've got sort of 80,000 to 85,000 kilometers worth of road network, which is actually more than the United States, and that's kind of done. And so you could argue, maybe on margin they need maintenance iron ore and for some buildings and so on. But I mean, fundamentally, that trade has gone. But I think, even in that case, even in that sort of being the real one bearish case, the other bearish case is the sort of slowdown. You get this massive property bubble blows up and the economy stalls. I think even in that case, these are tactical problems. They're not structural problems that detract from the fundamental story that there are hundreds of millions of people, as Aiki said, not just in China, in India and across the world, that are desperately interested in improving their livelihoods. And our living standards are so interlinked, intertwined to a commodity story.
I agree with you, but I think it is important that we look at the different stages of economic development and move from infrastructure to heavy manufacturing and then more into lighter manufacturing and then more into a tech economy that is going to drive different demand for different types of commodities as that transition takes place. But I would think the issue is not really the future growth of demand in China and India and Latin America or Brazil, as much as what the impact of that is on the developed economies, the commodity consuming and energy consuming economies. Here you can see the drag already on economic growth, even in the United States with a lower exchange rate. That is offset to a considerable extent simply by a commodity price increase to compensate for the lower exchange rate. And then when you take into consideration the higher demand for commodities and energy outside of the United States, this is a considerable cost increase especially for the manufacturing sector in North America and in Europe. So it's what on one side, tremendous demand. On the other, that manufacturing renaissance is going to be a lot slower, and that's going to have a trickle-through effect to consumer demand here in developed economies.